Dr. Clavijo, for this invitation. We are short of time. I'm going to be very concrete to ask just a couple of questions for the case of Colombia to understand how, from the experience that you have in your market, applying this InsurTech and the sandboxes, what can we learn from you? What can we bring to Colombia? The first topic has to do with Raquel and Andres. The experience of failures in sandboxes. The startups have a high rate of non-success or failure, and this is part of their success, because when they had a good result in one, that is the one that pays the cost of all those that were unsuccessful. Lessons learned from 3 years of experience in the UK in terms of the specific characteristics that a project should have to be successful, or which are the characteristics that you identified for a project not to be successful. As I have said, most, and Andres mentioned this, the experience is mainly in the banking sector. In insurance, the main difficulty is entry. Of these, I mentioned 3 of insurance, part of the sandbox, and they were successful. 3 of them were successful. For insurance company, what is difficult is entry. And I assume, this is not my experience, it's an assumption, but I'm going to say, a topic that maybe limits entry could be data protection. I don't know if Andres wants to add something. In the case of a sandbox in Colombia, we have to be very flexible. 30% of these startups change their business model with in the sandbox or after the sandbox because there was no market demand, or maybe the product did not work, so they change it. And in some cases, they are willing not to, they do not end up the sandbox project. 25% of the first group did not finalize the sandbox, and they take into account this flexibility when they planned an exit plan, when you protect the consumer clearly. I could add something as well. The objective is that when they start the participation, the product is not fully developed, but developed enough so that it could be successful. This is the idea. And then the support from the regulatory agency. Main difficulty is to entry. And in insurance, how to get the authorization. If it works in a given environment, when you want to go to the market, if this startup has the capability of participating in the market, to leave the sandbox and participate in the market, topics of licenses, topic of capital reserve. Most of the startups in insurance, they are purchased or they make part of authorized insurance companies. I take advantage of your reply to clarify something. The objective of the sandbox developed by the Superintendency of Colombia is to be proactive regarding new technologies that could develop hand in hand with insurance companies and with the same startups. And we have a hub, an area where we share experiences so that the supervisor is not in the back, but rather the supervisor is providing added value, is well identified and contributes with the discussion. This is what we want to achieve from the hub. And in the case of the sandbox, I want to make a clarification. What we are proposing is a sandbox for supervision. This is what we propose right now. One part of the regulations that you have to comply with is in this area of supervision in the basic provision legislation. And I think that this is the main area for the sandbox because it's a sandbox for supervision. Felipe Lega came yesterday. He's the regulatory authority. He came yesterday. But the idea is how having a sandbox in supervision could be of help at the superintendency. Once we have identified, we see how if something fails, as you presented yesterday, how we can provide support in this regulatory process if we have to make changes in regulations, amendments in regulations. With our own powers, the idea is to have this sandbox, which is for supervision and a sandbox for those that are under surveillance. As Raquel said, many of these innovations that you include in your own companies, the objective and the happiest, but in the sandbox, it it's beyond the capability of the superintendency to develop these startups, but in those companies that are not under surveillance. I have another question for Nick that has to do with the use of InsurTech. Nick explained that InsurTech as such, from the regulatory aspect, has a clear division between the application to the client, development of products, marketing of products, but it has another side, an application on technological apps internally in these procedures of each insurance company. This second point was not mentioned in your presentation in detail. The cyber risk. I want to approach the cyber risk and how these technological developments open up the situation of vulnerability. They are helpful, but we have higher risk for the insurance companies. And this risk, as such, is managed as in any company, as in Coca-Cola or any company. But when we face the situation of insurance companies that have this underwriting of the cyber risk to Coca-Cola company, for example, that do this underwriting of this cyber attack to other companies of the real sectors, we have then some questions, and this is the question that I want to ask. Are these risks, can they be diversified risk? Because I work with companies that recognize cyber risk. They can evaluate how to protect from the cyber risk, and based on this evaluation, we had this underwriting of cyber risk. Is this risk widely diversified, or could we have a catastrophe? Because today this is not seen as a risk of a catastrophe type of situation.
That's very helpful. Great. Okay, can you hear me? Yeah. That's very helpful. It gave me time to think what to say, actually. So I think a couple of points on cyber. In terms of products that insurance companies want to sell, cyber is one of the most attractive policies at the moment. So in the UK, and in particular in the London market, there is huge attempts to provide the capacity that clients need for cyber. The problem is that we have very little experience of cyber incidents, and insurance companies really don't have the data to figure out how to price the risk. And exactly to your point, Oscar, the problem is with cyber is the risk of aggregation. That as we saw with WannaCry, that was global. So when you're underwriting a catastrophe, if you're underwriting hurricane risk, you have some idea that, say, the hurricane's going to hit Puerto Rico, so we know that we just need to look at our aggregations in Puerto Rico. With WannaCry, that could hit Coca-Cola, Pepsi, all around the world. And so no one really has an idea of the possible extent of the risk. And so that's the biggest problem. The problem is not the availability of cyber cover. The problem is providing the capacity that the likes of Coca-Cola need to make it a worthwhile product. But it's a fascinating market. And so I think what we're actually seeing much more of, particularly in the insurance context, is a focus on, particularly with life and health, on regulators wanting to do their utmost to make sure that insurance companies have got whatever protections they can in place to prevent the cyber leak. So that was answering two questions.
Muchas gracias. Y aprovecho justamente, digamos, en este
The Financial Superintendency, through the Delegation of Operative Risk, is carrying out some surveys, consultations with those under surveillance of the system. They went to the bank and they are going to talk to the different insurance companies. Basically, the superintendent is going to measure through this survey two topics. One, the capability to react in the case of cyber attacks, infrastructure of the insurance company to manage the cyber attack risk, and second, the capability to manage the safety of information. The regulations, the framework is going to be established in a note from the Financial Superintendency. The objective of this activity that is going to be developed is to make an evaluation and assessment of how you manage these two potential risks and to try to identify and to provide best recommendations so that this could be implemented. This was done for the banking sector. That are more open to this type of risk because of their interface by an insurance company. We see that these new canals are being opened and they are more susceptible to these type of cyber attacks, and data protection in this case is what could affect the insurance companies of what in the case of data protection. So be aware of these survey that is going to be sent to you, and the superintendent will visit you. It's not a visit, rather you will be receiving these questionnaires, these forms to be filled out so that you are acquainted with the objective of these forms. I have a final question, a third question that has to do with how technology developments have helped to improve the client relation, the advice that is being provided to the client. We have seen in Colombia agency, they have quotes programs, so they send you a quote, and really you don't cover all the needs that you may need for these products. And the question to finalize for both of you, how do you think that these technology developments, or maybe in these sandboxes, you have seen some of these cases where you could help to improve the advice to the financial consumer that is provided? And one of them specifically could be emphasized for financial inclusion, not the one that gets the same customers of the bank, but rather the one that is bringing new people, opening up frontiers so that new people are going to get new insurances.
Yeah, I think the fundamental starting point for insurtech in the UK was direct sales. So in the UK, the main products that people buy are motor, because you have to, household and travel. In the UK, we don't need health because we have public health system, and then people will buy life. Now those are products that for the last 20 years have been sold direct in the main. So they were initially sold by telephone, and then there's been a huge take-up of direct sales by the internet. And so motor insurance, the statistics are staggering. The vast majority of people buy over the internet, and now the vast majority buy using comparison sites. So I will talk to someone and say, who do you have your insurance with, your motor insurance? And they'll say, I have it with comparethemarket.com. And you say, that's not an insurance company. I say, Nick, yes it is, because I went online and I clicked and I bought it. So there is no connection between the insurer and the consumer. The consumer is only interested in buying a product, and the benefits attached to the product are irrelevant. So it's mainly price, and I've ticked that cover. And it's only with that consumer approach, I think, can you get into the kind of niche products that we've been talking about, like Kuva. You have to have a consumer base that is used to buying insurance over the internet and is not too worried, well, is not worried at all about the terms and conditions, because most people don't read them. And it's a cultural thing. So if you compare Japan, which is obviously one of the most technologically advanced countries going, and they have incredible financial systems and banking systems over the mobile phone, but virtually no direct insurance over the internet. Insurance is still sold, house, motor is still sold by agents. So I think it's a cultural starting point that until such time as you have an established base of consumers who are purchasing insurance over the internet, you're not really going to get traction for these kind of niche Kuva products, because you need that bulk of people who are prepared to buy insurance and who don't feel the need for advice. They're just going to click, just like anything else.
I would like to add something. It is not a population that is forgotten, but at least we promote new generations that use internet and mobile phones that could have access to insurance products that they would not be interested in otherwise. So I think that this is going to be very interesting in the future for the millennials. Maybe they are not thinking about insurance, but they have this in their cell phone. They have this in their car, and they purchase the insurance for the car that they are going to drive over the weekend, and then they forget about this product. Yes, they want something immediately. This is the millennials. This is what they look, immediate type of product in the insurtech, in the sandbox, in the insurance market and technological market. And the idea is to try to solve regulatory problems that may arise. But this is something that is happening right now. Now, to finalize, we have just 1 minute left. Along the lines of what was mentioned yesterday at the Financial Superintendency, we acknowledge that there is no way back. The idea is to be part of this, to be part of this present situation, and not to try to go back. And this is why I invite every one of you to go back and see these technology type of developments regarding marketing of insurances, to acknowledge that the marketing channel of agents is very wide. At the beginning, in the banks, these shops were like the points for contact for sale for banks, or the Baloto office. This corresponding branch is the way how you can reach customers. The customers, the clients know where insurance companies are, but they never go to see them, never go to visit these insurance companies. How can you reach how you are clever enough to reach the consumers through this type of market channels when you have clients of a large shopping area, or would you have customers of public utilities or any legal information, and you could have some type of agreements with these type of institutions to sell your products, to have this information on these new customers as a base of customers, but you could offer these insurance products. What happens? This is going to be solved fast, immediately. We need fast, rapid protection, and this is why the Financial Superintendency, we have established a fast type of process for approval of contracts for these corresponding branches. We have two, and we hope to have others so that you could sell these products to these corresponding agents. The idea is that the product should be easy, a very simple product, because if we start marketing products that are not easy to use, simple products, then we would have problems in the future with these immediate type of products, because we are products that are part of a contract to be marketed. The invitation to each of you is think about simple products, simple to use. Think that this corresponding agent could be this one here, your phone. This is the agent. And we hope that you use this tool that has been regulated a couple of years back, and you are using two or three insurance companies are using widely this tool. And I know that you have planned this for the future. We are at the superintendency going back and hoping to get new contracts. We want to take advantage of this tool to reach other people, to have inclusion. But remember that we are going to have some very simple product with very simple waivers and exclusions. You have stated that these contract of the corresponding branches have some problems. The director of the FUR said how these restrictions will be eliminated or reduced, because it is understood that the insurance corresponding agent is different to the bank corresponding agents, and the idea is together with you we'll try to provide a way to have projects and technological developments to and work hand in hand, because we have the possibility of marketing this insurance. This is going to be a mass type of marketing as internet, and we want to ask you to provide a very simple product. If you have a simple product, this contract is going to be approved. If you have products that are not so simple, where you mix coverage and you have exclusions that cannot be easily explained, then these type of products will have to sit down with you and take longer so that you could improve your product and have a simple product. Thank you very much, Nick. Thank you, Raquel and Andres. Thank you very much. And thank you for being here for these minutes. Thank you very much.